Santosh Rao as well joins in from Manhattan Venture Partners to talk about which way the global markets may be headed and, of course, to talk about Jerome Powell's commentary as well. Santosh, hi, good morning and good evening to you. Thanks for staying up. Santosh, just wanted to understand, firstly, a word on this divergence that one is seeing. While all through 2020, India outperformed and that's now caving it. Is it going to come at the cost of US markets now finally getting up from that oversold zone?
Yeah. You mean the U.S. economy coming back up? Is that the question?
Yes,
Uh,
and thereby the US equity markets too, Santosh.
yeah, I think there are a lot of factors going on at this point. I think U.S. economy is U.S. stock market is in a holding pattern at this point. The market believes that the Fed may not be as hawkish as they're saying, even though the Fed chairman has come out over and over again that they will continue to be hawkish and stay the course because they want inflation down. So I think that's the big debate going on. This Thursday's CPI report will be a good tell on the back of a very almost a Goldilocks report last week on the job market. So I think combine that, the market thinks that the Fed will let off slightly, maybe go up 25 basis point and stay there for a while and see the impact. So it's a holding pattern, like I said, a lot of variables at this point. Can't say which way. The rally recently is good. But it's too short term. The next shoe to fall or the next data point to see is the earnings reports that come out next week and the forecast that these companies have. So I think all those things, I think at this point, it's a rally that needs to be sold. It's not a long-term rally. It's a bear market rally at this point, considering all the variables that are out there.
Good morning, Santosh. Anantha also joining in on the conversation.
Right.
So when the Fed chair says will not act like a policy climate maker, whichever way you look at it, we've seen interest rates being raised, 7 times, 4.25 percentage points already in 2022. Is it a given? 5% is the likely what we're going to see, something Goldman Sachs was just talking about yesterday. And therefore, what is all of this going to mean for flows? We've seen what's happened with the US dollar, and what we started to see already early in 2023 is a very strong commodity rally.
Yeah, I think he's going to stay the course at this point. But don't forget, next year we're coming into an election year, a very strong presidential year. So there's going to be political pressure. And that's what Chairman Powell was talking about today, that he needs to stay the course. It's not going to be easy. So he will continue to stay the course and keep raising rates and do whatever it takes to bring inflation down. His target is 2%. We are around 5%. The core inflation is very high at this point. So he needs to bring, so a lot of things that he needs to do, and he'll stay the course, and he does not want to fall behind the curve like he did in the beginning. So I think that's going to have an impact. We'll see the dollar was up, then it was down. I think today it was again up slightly. So it's going to be a function of what the Fed does. Fed is the key kingmaker at this point. Everything revolves around the Fed. So let's see what he says. And the market is kind of split between what he can do and what he wants to do. At this point, they're leaning towards that he may not be able to do exactly what he wants to do. He has to moderate at some point because he needs to wait and see. Go there, stay there for longer and watch and see the lag effect of everything that he's done, and then maybe raise rates. Like the CEO of JP Morgan said today that maybe he may have to go to 6%, but he needs to come to 5% and wait and see what's going on. So there's a lot of the mixed opinions out there. So it's going to have an impact on the dollar. It's going to have an impact on the commodity prices. So all that thing. So all that starts with the Fed. So let's see. Let's wait and see.
What we did see, meanwhile, was Wall Street and higher. No clues about the future rate trajectory, but the Fed chair also answering questions on how autonomous and independent it has been. Joe Biden resisting temptations to make comments as far as the Federal Reserve goes, something his predecessor, Donald Trump, did not as president. A very pertinent point. We are headed into election year. Thanks a lot, Santosh Rao, for being live with us today morning.
Thank you.